Hello everyone. Last time, for a hot second, I thought that I invented the averaging down strategy. Of course, in reality, it has been around for years and years. And once I started looking deeper into it, it became clear that there is much nuance even in that seemingly simple approach. This reinforced the idea that this channel started out with. To be successful, you really have to know what you're doing. So today I'm taking a little break to reflect on what I've been doing so far and what to do next. I have been following the BTC USDT market and noticed that, unless something dramatic happens, the price tends to hover around a certain value in a wave-like pattern. I'm looking at it in the very short term, let's say 1 or 3 minute candles, since I am trying not to keep an open position for too long. The idea was to watch the market for a bit, get a feeling for the amplitude and the frequency of the waves at this moment in time, and then buy at the local dip and sell as soon as the wave is back up. Since BTC USDT pair has 0 fees on Binance, I can play around with ridiculously small change percentages, such as 0.1%. A few times I successfully rode a few consecutive waves, somehow managing to buy near the local dip and sell near the local peak. Of course, this pattern cannot last forever, and often sooner rather than later, the market deviates from it. Sometimes you buy when you think you have reached the bottom of the local dip, but the price keeps going further down. At that point, I sometimes get anxious, not knowing how to handle it. Should I leave it alone and simply wait for the price to bounce back up? Or should I buy more to average down? Or should I sell at a loss now rather than at an even bigger loss later? Or maybe there is something even better that I am not aware of. This state of affairs leaves me quite unfocused. The mind swings from one possible choice to another without actually acting on either of them. And because of that, the need for a plan of action is becoming ever more real and urgent with each day. Have you ever heard of the story of a man called Sully Sullenberger? Well, he was an airline pilot who, back in 2009, saved all 155 people aboard Flight 1549 out of New York City, which got into a serious emergency. Shortly after takeoff, both engines of the plane were taken out by a flock of birds. Sully proceeded with an emergency water landing on the Hudson River. In this stressful life and death situation, he and his co-pilot kept calm and followed all the safety protocols for this scenario to the letter. They knew exactly what to do and how to do it. Sully wrote a book about it, and then it was made into a movie directed by Clint Eastwood and starring Tom Hanks, while the airliner itself is currently in an aviation museum. Now, how is this story related to trading? Well, experienced traders often talk about having a well-defined strategy rather than being random and opportunistic with your trades. Firstly, you can objectively evaluate the performance of a well-defined strategy, make adjustments, and re-evaluate it over and over again. While when you trade randomly, there is really nothing to evaluate, nothing to improve. Secondly, having a strategy makes you more mentally focused, stable, and less emotional. An opportunistic trader is more likely to experience anxiety, fear, anger, panic, and other emergency emotions when faced with an unexpected situation. This may lead to irrational financial decisions. Of course, some people are addicted to the roller coaster of extreme highs and extreme lows, but that's usually not my MO. Ideally, in a strategy, you know exactly what to do in all eventualities. When to open a position, what the size of this position should be, when to take profit, when to stop loss, how much you can lose before you scrap or reevaluate your approach, when to double down, and when to take a break. Actually, when emotion is taken out of the equation and all the facets of a strategy are clearly defined, I guess you could automate the whole thing and have a computer make trades for you 24/7 according to your set of rules and algorithms. In my case, it is a bit too early to automate since I am still figuring stuff out and gradually building a strategy. Also, a comprehensive strategy could cover even the things outside the trading interface. Like, for example, what do you do if you have lost most or all of your deposit? Should you give up, or should you bring even more of your hard-earned cash into the trading world? And on the other end of the spectrum, what do you do with your huge profits? Will you keep it all in the game, or will you withdraw some of it and go on a vacation? And what about market behavior? There should probably be several clear strategies, each befitting a specific market environment, much like pilots have many different protocols for different situations. These are only examples of a few basic questions among many others that usually inform a strategy. I seriously doubt that my strategy making, which is now in its very infancy, would ever be deserving of a book or a movie or a museum display about it, but I do actually want to gradually build a strategy or two nonetheless. If nothing else, then for the very experience of having worked it out instead of just dabbling. And also for the sake of my own sanity and for the sake of my bank account.